Gold resumed its downward journey yesterday, failing to stay above 1850. We have seen a good drop, and in fact, it has breached all the support levels. We have seen yesterday that below 1840, more bearishness may prevail, and as long as 1830 is respected, the chances of a reversal will exist. It has dropped below 1830, it has gone towards 1828 and closed the day. Now, today again resumed the bearish bias, second red candle in making here. It has already achieved 1850. Now, what to expect today? Can we expect a further drop, achieve the bottom of the channel, or there could be a possibility of a reversal? Which position you should take in order to profit? We will see with the help of charts and indicators. We'll start from the hourly charts and slowly graduate towards the daily charts. Towards the end, I will give you the trading strategy and levels. Do watch till. Let's start. First of all, if you look at the hourly chart, see on the hourly charts, gold is trading in this bearish channel. The bottom of this channel somewhere here at around 1813 levels, which is going to be a good support, and then the bottom of the long term channel is at around 1810, which is again a very good support. Now, in last couple of days, and in fact since last week, we have seen all the support levels getting thrashed in a single candle, and hence today again we have to be watchful, cautious, alert of those. At the same time, if you look at right now, the prices are divergent from the 20 period moving average, which is sitting at around 1830. Now remember, only buying entry, only comfortable buying entry is above 1830 levels today, beyond which also we should be alert till towards 1836 and 1840 levels as the next milestones. Yes, hitting the bottom of the channel, if it tries to reverse, what could happen? It may try to yield a candle which is parallel to this and try to create or achieve the levels which can take it towards 1840, 1850 zone, which is going to be the top of the parallel channel. But right now it is still staying bearish, not showing any signs of a reversal. Stochastic again at bottom, MACD is divergent, MACD is bearish, just two red candles, third red candle can follow here. RSI is also oversold. And right now it appears the buyers are not interested in keeping the prices up, or there are no buyers at all. That is what is appearing here. But the markets only reverse when everyone goes on selling, everyone goes on sitting a position of sell, then only the market tries to reverse and the buyers might pitch in. Right now it is still not the case, and it is just exhausting all the buy positions as of now. Now, if you look at the 2-hour chart, see 4 to 5 candles got the support here at 1828. Lower highs were created, and then this breakout is seen. Now, if you look at the breakout closely, you will find increasing candle size, increasing bearishness. And on the downside, now the support is going to come in at 1813, 1810 zone, which is going to remain a very good support zone. Stochastic is still oversold. MACD is divergent. MACD is bearish. It is looking downwards. And if you look at the waves in MACD, first wave, second wave, and this is the bearish move. It is continuing. It is continuing to diverge. It is suggestive of more bearishness before it looks forward to any retracement on the upside. Remember, this retracement can be a little stronger, but it is right now it's staying bearish. RSI is still oversold and continuing to stay oversold for a while. If you look at 3-hour charts, likewise on the 3-hour charts, see moving averages are moving sharply on the downside. Look at the fall there, and it appears there is further more bearishness which is still to. And look at the divergence of the price from the 20 period moving average. If you look at, see, after staying bearish, there is only one opportunity when it has achieved the 20 period. Now it is again staying divergent from the moving average. It can consolidate, it will wait for the moving average to come down and then achieve the moving average. That is what it is trying to do, and still bearishness is prevailing. Now if you look at the candle size increasing in body size, if you look at the support levels 1828, 1830, these support levels are breached and continued on the down. Stochastic is oversold here and continuing to stay oversold. MACD is divergent, MACD is bearish. It has in fact achieved extreme lower levels at minus 15. It does not mean that it cannot achieve minus 20. Yes, when it's oversold, it gets extremely oversold. Similarly with RSI, it is extremely oversold as of now, not showing any signs of reversal. Coming to now, look at 4-hour chart. See, after getting the support for 3 candles, it has given a breakout, a straight red sharp bearish candle. There could be a follow-up candle which might take it towards 1810. Possibility exists, and hence below 1815 you can sell, but then 1813, 1810, 1808, these are 3 nearby support levels. Below 1808, the direct lending is towards 1800. but I still expect that there could be a possibility of a little retracement. However, it is just a retracement, not a reversal. As long as 1830 levels are respected today, we are not going to consider this for a buy or consider this for a reversal. Only above 1830 a little rise can be expected. Stochastic is oversold, MACD is divergent, MACD is bearish, it is looking downwards, and it has also come to the extreme lower levels here at minus 20, and it can consolidate here before looking forward to reversal. RSI is oversold. Does this suggest? Now, see, when the indicators are getting oversold, it does not mean that it cannot continue. What we have seen is continuous downward trend here. But at the same time, I will show you something on the daily charts here. Look at the daily chart. See, gold has been staying in this bearish channel for a while. It has hit a bottom here, then the retracement to the top. Now it is again trying to hit the bottom here. Now the bottom of this channel appears to be at 1810 levels, which makes it a very strong support zone. At the same time, 1800 is the next stronger support level here. So now we have to wait for it to break past 1800, which is going to be a definitely stronger support zone on the downside. Still, if you look at the daily charts, you will find, see, yesterday it has opened flat. It has yielded first bearish candle. Today again, the candle has started flat, and it is continuing the second red candle in making. And this also is a indication that even if prices stay below 1815, the chances that it may get support at 18.8, 1813 zone is going to remain very, very strong. And these support levels might prove out to be a good support for gold for it to reverse or retrace a little on the upside. If not today, possibly tomorrow, day after tomorrow. At the same time, below 1808, 1800 is the level which I will be looking forward to, which is going to remain a great support for gold on the downside. Below 1800, remember, below 1800, if not this week, next week, those who watched my monthly review, I have given below 1800 two key levels, 1780, 1750. It might move towards 1780, 1750 levels, though it will take a little time, because see, things are getting oversold. There should be a possibility of a little retracement. Finding the support at around 1800, 1808 zone, you can see a little retracement in the coming couple of days, where prices might try to move towards 1830 levels as. But for the day, it appears it is going to stay bearish. Stochastic is oversold. MACD is divergent. MACD is bearish. Candle size is consistently increasing. RSI is also staying oversold here. Looking at this, you can sell at 1815, but then be cautious here. 1813, 1810, 1808, three support levels, and below that, we will look into 1800 as the next major milestone which gold wants to achieve. Remember, once again, it appears that 1808, 1813 may prove out to be a good support, and hence, if you're taking a sell position at 1815, you have to ensure that you are putting the stop loss at your entry price, so that in event of a reversal, your trade closes without any loss. On the upside, any buying entry one can take at around 1825. Beyond 1825, 1828, 30 levels is the first resistance zone, or rather I will say 1828, 1832 levels are the first resistance zone, beyond which you can say 1836, 1840 levels will get reached. If it stays above 18, the chances for it to move further on the upside will increase, as in how it breaks each and every resistance on the upside. Now look at moving averages are consistently looking downwards. It may wait for it to show the fall here, a sharp fall here. So yes, the candle again today is going to stay red. That is what is my expectation, and hence trade accordingly. Trade with a stop loss, trade with a trailing stop loss. Do like, share, subscribe, and comment, friends. Your every like, share, comment is a great support motivation. At the same time, you can join my mentorship batch. The 29th, 26th batch is going to start on 9th of October. Limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day ahead. Thank you.